Hey and welcome to our first video, Why Invest?
Today, we're going to talk about why it's smart to invest and show you the different investment options out there.
Investing your money is key for long-term financial stability and growing your wealth. It helps your savings grow, beat inflation, and reach your financial goals like buying a house, paying for your kids' education, or having a comfortable retirement. Diversified investments can reduce risk and give you better returns than regular savings accounts. While there's some risk in investing, being informed and thinking long-term can lead to big financial wins.
Inflation is one of the biggest reasons people feel like they need to do something with their savings. Not sure what inflation is? It's when prices for stuff go up, which means your money doesn't go as far. Basically, a hamburger costs $5 today. A year later, that same hamburger costs $6. So if you keep your money in an account or under a pillow and don't try to grow it, you're losing value over time without even realizing it.
Most people try to fight inflation with savings accounts, but those usually just keep up with inflation at best. This means that even though you get some interest over the year, it's not higher than inflation, so you're still in the same spot, or just a little less worse off. For those who want to make the most out of their savings, we've put together a few basic options for what to invest in.
Investing money is key to long-term financial stability and wealth growth. Let's break down some common types of investments. Stock come first. When you invest in stocks, you're buying a share in a company. This makes you a small owner. If the company does well, the value of your shares goes up, and you can sell them later for a profit. Some companies also pay dividends, which are a share of their profits sent to you just for holding their stock. You also get a say in company decisions, like choosing a new CEO.
Next one are bonds. Investing in bonds is like lending money to entities like governments or corporations. You agree on a fixed interest rate and repayment period. The issuer uses the money for projects like opening new branches, and they repay you with interest and eventually return the principal. Now, real estate. Investing in physical properties such as apartments, houses, or commercial spaces can generate rental income and capital growth. It requires a larger initial investment.
Next in line are commodities. Investing in raw materials like gold, silver, oil, or agricultural products such as coffee and wheat. Their value can fluctuate based on global supply and demand. Upcoming are investment funds. Managed by professionals, these funds invest in a wide range of assets according to a defined strategy. Following are ETFs, exchange-traded funds. These are funds traded on exchanges that track an index, commodity, or sector. They're great for people who want to invest without diving too deep into the details.
Cryptocurrencies are next. Digital or virtual currencies like Bitcoin or Ethereum, secured using cryptographic techniques. They offer high potential returns, but come with significant volatility and less regulation compared to traditional investments. The last in our list are venture capital investments. Investing in startups or rapidly growing companies, usually high risk, but potentially high reward.
It's important to diversify your investments to reduce risk. For example, instead of putting all your money into stocks or bonds, spread it across different types. Diversification within each type of investment is also wise. By spreading your investments, you can manage risk more effectively and increase your chances of financial success.
By evaluating your savings, you can save up for your goals sooner, whether it's a home, university for your children, or financial independence.
As a bonus, you will learn more about financial markets, the economy, and how to manage your finances effectively. This knowledge can help you make better financial decisions in everyday life. No matter what you decide to invest in, it's important not to delay and to start, even in small amounts. But the most powerful aspect of investing is time, due to compound interest, which we will discuss in the next video. If you start investing early and regularly, you can create a sufficient financial cushion that will allow you to live without financial worries, so it's best to start as soon as possible.
Whether you are a beginner or an experienced investor, it's important to understand that investing is not a quick way to get rich. It requires time, patience, and discipline. One continually learns in the world of investments.
Are you ready to start your investment journey? Check out the other videos where we discuss types of investments in more detail, investment strategies, and topics like compound interest, inflation, the psychology of investing, and more, and learn how to grow your money.
See you in the next video.
Have a nice day.